Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst, fresh out of the sauna, ready to look at the charts, recap the previous week, and what we're looking at going forward. All right, so we're in the last few minutes of the week here, and pretty much an opposite week of what we had last week. We headed into this week with the question, do we get bear follow-through from our FOMC reaction low breaking? Because last Friday we closed right down near that low, and that was the big question. And the answer is no. The bulls bought that dip. And we knew that if the bulls bought the dip to start the week, we were scouting the falling wedge then to be on the table as a potential most likely scenario. And so right now we have the falling wedge breaking bull, but we know price levels matter a bit more than trend lines do. So if we just look at SPY, we've got the key resistance being tested, and that's at 599.70. Right behind it, we've got a level at 602.48, and then we're just looking back at the all-time high. If we do see a pullback from here, we have tons of space for a daily high or low due to the size of this bounce retracement. So we're going to look at the potential of an inverse head and shoulders. Oftentimes wedges turn into head and shoulders or inverse head and shoulders. And if we reject from this resistance zone, we will then scout the daily high or low, knowing that we don't have a confirmed daily uptrend yet. Technically, we're still in a daily downtrend. Lower high, lower low, lower high, lower low, still a lower high. Again, very impressive bounce. So we're going to scout a daily high or low, and then if the bulls can confirm the daily uptrend, we're going to be looking right back at the all-time high. The size of the retracement next daily consolidation is going to help us determine what is the most likely scenario. The bulls don't want to give back more than half of what we just saw. We do not want to give back more than half of that bull move. So, NASDAQ, same deal. Again, the weekly chart, no red flags. Just zoom out a bit. 2-week time frame. What does that look like? Absolutely, a bull flag is on the table. We're coming off of all-time highs, and we know that the bulls have all the longer-term trends in their favor. Same deal. We got a little bit of bear follow-through Monday first thing, but bulls bought that dip pretty aggressively. If we look at the downtrend resistance line, we're trying to break above it. And again, same deal. We've got the resistance level, and if we fail, can the bulls pull off the inverse head and shoulders? But overall, definitely a solid win for the bulls on the week. SMH, V-shape recovery. I got shaken out of a position here. I was trying for a swing trade on this day and ended up with a really nice entry, but big gap down on Monday shook my resolve a bit. But with semiconductors, again, at this point, same deal. Anything under 254.33 is a lower high, but we have a big enough bounce with a ton of space for a daily high or low next consolidation. And we are still chopping around fairly sideways. But at this point, I would call this a back test and hold. We definitely dipped further than the bulls wanted. In an ideal world, we back test and hold previous resistance, now support, into continuation. But here we are. This is on the weekly time frame. This is the strongest weekly close that the semiconductors have seen in a couple of months. So definitely paying attention and watching for daily higher lows to be the most likely result of the next consolidation. Tesla. Got to keep an eye on a potential 4-hour rising wedge on Tesla. We had a pretty solid bullish day today, but there's profit taking into the close. You can see we just closed right now, but a pretty decent drop there on the 15-minute time frame. And so 4-hour, I'd be keeping an eye on this uptrend resistance line. And if we're going to draw our support, it'll be like this. If this rising wedge breaks bear, that means be cautious of a weekly lower high. So the way that we stand, this is very healthy weekly consolidation. We held EMA 12, minimal retracement, higher low is now set. So 373 is an important support level. And if that is a 4-hour rising wedge, it is possible that we set a weekly lower high. Again, just something to be keeping an eye on. You show me this weekly chart, I say there's no red flags whatsoever, but we always want to put on our opposing side glasses to make sure we don't miss anything. And for Tesla, it's that 4-hour rising wedge as a possibility, but the burden's on bears to prove it after a solid week for the Tesla bulls. Healthcare, not doing a whole lot, pretty sideways overall this week. The weekly time frame, we know a lower high is the most likely scenario, anything under 147.12. and the bulls have to confirm a weekly uptrend to show us anything's different. We've been in a weekly downtrend for months and months at this point in the healthcare sector. Have to confirm a weekly uptrend. Bulls definitely would prefer to see one more leg up to try and shape up a weekly inverse head and shoulders. But as of right now, stalling out a little bit. Pretty much a non-event week for healthcare as far as I'm concerned. We started the financial sector earnings and just a huge turnaround. Again, we closed last week very weak. Lowest level in a couple of months, back into gap fill territory. And it was nothing but buying on the gap down open Monday. And that's probably one of your most bullish weeks that you're going to find in the financial sector in quite some time. Just a monster bullish engulfing. What's the monthly chart look like? That's a potential monthly bull flag right under all-time highs. Again, same deal, tons of space for a daily high or low. We do need to confirm a daily uptrend. Oftentimes you'll see significant moves, most notably since the FOMC when volatility in the market has been heightened a little bit, but you'll see a significant move up or down. And if you're not establishing supports and resistances along the way, the retracement can be significant. So bulls want to ensure that when we do top out, that we don't get back 50% plus of the move if it's going to be productive, healthy consolidation. One thing I want to note is Apple. The weakness in Apple is screaming this week. We're coming from all-time highs, stair step, bull move for a couple months. We lose it and we're free falling a bit, obviously, relatively speaking. But in my opinion, Buffett is selling. And we could see it previously. And there's times when the relative weakness is so significant. I mean, again, today, Apple, well, it was up, 0.75%. But Apple divided by QQQ is showing us that, we're coming down towards the lowest levels, the weakest we've seen in almost 6 months. And so it's just been a relative weakness feast here. And we know Buffett has sold Apple multiple times fairly recently, and you will see that relative weakness when large positions are unwinding. We saw it with Tesla. Remember when Musk was selling Tesla shares for the Twitter acquisition? It was immense relative weakness while that was going on. And so if I had to guess, I'd say Buffett is selling more, and that's why Apple has seen this significant drop. But again, the NASDAQ bulls are looking at this and saying, we had this kind of week with Apple doing nothing but showing weakness. That's a win. So we'll see if that relative weakness is maintained or not. But we do have space now on Apple for the potential of a weekly lower high whenever we do get a bounce going. And of course, earnings are upcoming. I mean, that's the narrative from here. We went through CPI, PPI this past week, big bull reaction to CPI, and now the narrative is going to be on earnings. Netflix starts next week, and then a couple weeks later, we'll have all the tech names reporting. IWM is choppy for me. I don't have clarity here. So, you could draw, it's probably a megaphone. Generally, when I don't have clarity, it's a megaphone. So we got our downtrending support. You could draw an uptrending resistance. Those are terrible lines, but you get the idea. Resistance is 227.17, which we tested today and did not break. But again, just choppy, weak bounce, bear break, no follow through, bull break, no follow through, bear break, no follow through. Do we get a bull break, no follow through? We will see. But again, I haven't cared about IWM for 6 weeks at this point, and that's not changing in the short term. Quantum names, again, continues to have such beautiful trading opportunity. And I'm almost like, why isn't everybody talking about this sector right now? Because every day we get 10% to 20% moves in both directions, and it's just a trader's dream. And it reminds myself, oh yeah, there's not a ton of professional traders out there on Twitter and on YouTube, and that's why. Because people like me are like, man, this is the opportunity of 2025, the last 6 weeks in this sector. And the views and the analytics are dropping off as people are losing interest and anticipating again that we're going to tighten up. Anyways, the last video that I put out, we were looking for 4-hour consolidation. Talked about how IONQ is in its own world as the lead bull, but we got our high, low. We're scouting a lower high, which may be set. And then we'll scout a higher low, and we're looking to tighten up into the start of February on IONQ. We were looking at its peers and looking for 4-hour consolidation. I said I was bearish until we get 4-hour pullbacks, and then I will be bullish to scout 4-hour higher lows. So the bulls are hoping that on a name like QBTS, that it's a 4-hour inverse head and shoulders, heading towards hourly oversold conditions. I'd like to see a gap down on Tuesday. Monday we have no trading with MLK holiday, but I'd like a gap down into hourly oversold to look long for a daily higher low on some of these names. There's QBTS, here's QUBT. Again, 100% bounce. Doesn't look like it, right? But that's 100%. And now we're going to scout a higher low. We have a tightening range here. And so we're going to scout a higher low compared to 641 patiently. RGTI rolled over, was trading that bearish today. We're going to watch gap fill at 897. It held on better than its other names. It's not as close to hourly oversold, but we will be scouting a daily higher low. And for volume and volatility to continue to drop off from here, but still going to be sufficient volatility for a good bit further. Crypto, very strong today, leading to the Trump inauguration on Monday. We have Bitcoin heading up towards all-time highs, came within 2% today. MSTR, daily uptrend confirmed. We've got coin, daily falling wedge, bull break, very similar to the falling wedge on the indices, but a more clear bull break here. And just solid strength in crypto as long as Bitcoin all-time highs are on the menu. And again, just another spot where we're going to be scouting daily higher lows to be the result of next consolidation. As far as the broader market is concerned, this is where, I'd be looking for hedges. I already have my hedges from back here. But if I didn't, and I am long exposed, definitely starting to grab some hedges into resistance, but all depends on your individual game plan. The dollar is still real strong. Daily uptrend remains our guide. Could this be a head and shoulders? It's possible. Obviously, the burden's on bears after going up for so long, but we would need to fail the high and then drop down and break 108.60 if anything's going to change here. We have gold testing resistance and rejecting initially. Again, just a very clear resistance zone to be watching there. Silver much weaker today. Silver, we've been watching this falling wedge potential. But if we go to the weekly, anything under 32.33 is just a weekly lower high. So bulls need follow through if we're going to shape up a monthly higher low, which is what the bulls are hoping for. Currently a monthly inside bar halfway through. Oil. So we knew oil volatility was coming to start the year because we had the tightest, I forget what it was, 6-week range that we had been in years. It broke bull and we got tons of follow through. Ideal scenario for that equilibrium to respond in that manner. Now we go to the 2-month tightening range and we are knocking on the door of resistance, but we failed initially. So that resistance is $80. We got up to $79.44. It's not going to be a clear rejection unless we lose the daily uptrend. Really, daily EMA 12. We would need to lose daily EMA 12 if it's going to be a convincing loss, or I should say convincing rejection, from that resistance. Watch very closely. This is a very important battle for oil that is going on now. Energy sector is just so beautiful. Again, the first time I've traded the energy sector in probably years was because we hit our super stack oversold conditions in extremes. And that tells me, again, when you're firing off a daily super stack, our indicator, that means the 12-hour, the 4-hour, the hourly, the 30-minute, the 15-minute, the 5-minute are all crushed at the same time. Say, fine, I'll give it a shot. Better now than never. And again, you don't establish levels on the way down and you free fall, the retracement bounce can be much more significant. Never would have expected to V-shape in this manner, but at this point, I got a risk-free stop under the low, and I'm gunning for all-time highs. We'll see if we get there. If not, we're going to look for a weekly higher low with tons of space for it to form. Again, we got a lot of Trump plays that are really strong recently. Even the private prisons like Geo, big move up to all-time highs. Weekly bull flag confirmed there. Obviously, crypto as well. So that's the narrative this week into the inauguration, and energy potentially benefiting as well. Other than that, natural gas. So natural gas, gap up open on the week and a pullback, pretty much a double top. Got to be cautious of weekly consolidation. Again, we've gone up on natural gas at this point, a 50% plus move since our last weekly consolidation. So again, my target is in the 5s, and I'm going to sit through consolidation, but we're watching the daily higher low of 373. Bulls, obviously, ideally want to hold that and keep on going, but if we lose it, we're going to zoom out and look for an eventual weekly higher low. Once a weekly higher low is set, I'm going to move my stop up. My entry was back here for that weekly inverse head and shoulders. Whole lot of inverse head and shoulders and falling wedges these days, but nice visual guides. So that's what we got into next week. Key resistance test in the indices. If we reject, we scout daily higher lows. We look for the potential of inverse head and shoulders because of the magnitude of the bounce we saw this week. And other than that, that's pretty much it. Tons of names scouting daily higher lows. And we would need big bear volume if we're going to head back down to the recent lows of where we came from after the size of the bounce we've seen to this point. Do good things. Appreciate you watching. Thanks for the likes and the shares, and we will see you soon. Have a great long weekend.